Hello, what up my people? Welcome back to my channel once again. Today I'm going to be sharing my trade recap on gold. So today being 8th June 2025, I actually caught some nice trade on gold and I'll actually be sharing my confluences, my confirmation and actually the strategy I used to actually catch all those sweet sniper entry trades. So join me on my screen so that I can actually take you on a sweet ride on how I actually caught those trades and the confluences and confirmations we use to actually enter those trades. So join me. So welcome back to my screen, guys. So being the new month, we're going to start this trade recap from 2nd of June 2025. We all know my normal strategy of double engulfing. This particular double engulfing was created London session. We actually started rallying out of this zone. As you can see, you will see 2nd of June 6:55 a.m. The market has already started rallying before London session. So I think London session was around this double engulfing. That's why we saw immediate buy and immediate sell. Can you see 7:50 going to 8 o'clock in the morning for London session? So irrespective, I saw this particular double engulfing together with an order block lying around it. We also have an imbalance irrespective. I saw that, but because of the rally that it actually brought from here, we still have a lot of zones that we feel it's supposed to clear some zones around here. So irrespective, this double immediate buy and immediate sell, you all know how I trade my 5 minutes time frame. I don't go around on the higher time frame and trade only the 5 minutes time frame. But for other strategies like MSNR, I actually go back to my higher time frame, analyze my higher time frame before I come back to the 5 minutes time frame or probably the 15 minutes time frame. So irrespective, when I saw all this formation in the market, what I was expecting was a pullback. Normally I was supposed to use fib level for this, but if you look at the run is too much for a fib level to be respected. Everybody knows gold. You don't expect gold to rally down to this particular maybe imbalance for you to say you will enter here. Even this particular order block was not even an option for me. Gold always look for little retracements and continue rallying up or rallying down, depending. So when I saw this double engulfing, that was my number one confluence. It's also lying on my psychological level. I took this psychological level out because I just wanted you guys to understand why I always use my psychological level. This psychological level and reaction levels, go and check. SMC is not really effective right now on gold. Not really effective, but if you know how to trade zones, you would surely be bagging it out this particular period on gold. So irrespective what happened, when the market came into my double engulfing candle, it tapped me in. Now I brought this thing up because of my spread. It tapped me in and immediately gave me a 5:1 RR. I didn't tighten my stop loss because of some reasons. Because of this particular order block here and this particular imbalance, it might end up maybe probably retracing for this imbalance or probably retracing for this order block. But irrespective, I didn't see any reason for it to retrace to all this place, and boom, we actually got a 5:1 RR. So irrespective, when I was having those formations, I was getting some formation of order block here, and irrespective, I saw a hammer candle for this particular order block. When I saw that hammer candle for this order block, creating formation, we saw an engineered liquidity. Don't forget, on gold, you always see engineered liquidity. There is no how you would actually be trading gold and you won't see any liquidity being manipulated. I didn't think this liquidity actually came to this order block. That means the order block is off. So seeing this engineered liquidity, what did I do next? I waited. Patience is part of the game as a whole. You have to be patient irrespective. So I waited for this particular market to come to this engineered liquidity. What happened here? When it came to the engineered liquidity, what happened? It gave you a little reaction. So if you are part of those early buyers, you buy here, and at the end of the day, the market spikes in and takes you out. Now this is where it rewards the patient ones. This is where it rewards the patient ones. So I kept my sell limit irrespective on this particular zone. Can you see little retracement just little retracement. So let's count our rule irrespective. Firstly, we have an order. We have a break of structure here. Irrespective. This is our break of structure. Rule number 1. Our order block. Rule number 2. Our liquidity. Rule number 3. Liquidity, inducement, anything you want to call it. It's all English, you know. Liquidity. Rule number 3, and my entry. Can you see? Precise entry. We cut a 5:1 RR. Let's say a 6:1 RR, but irrespective, I didn't tighten my stop loss enough. But that's it. 6:1 RR. That's how we actually bank this particular trade. Now, my psychological level. Don't forget reaction levels. Go and back test this thing very well. Very, very well. You will understand what I'm saying. My psychological level is where I take profit from. Can you see? The moment it gets to this particular psychological level, what happened? We had a little retracement. I knew that retracement wasn't going to do anything, but I took my profit on my psychological level. After getting to my psychological level, what happened? We started seeing consolidation. So for Monday, that is how I actually got these 2 trades on gold and on the 5 minutes time frame. So moving forward to Tuesday, trust me, Tuesday was a choppy day. Very, very choppy day. I didn't take trade on Tuesday. I only try to see some setups if they come up, but irrespective, I didn't see any trade for Tuesday. And fast forward to Wednesday, you see that's part of trading. You have to know that there are days you cannot trade. Preserving your capital is part of the game. You don't want to make money from this particular trade and the next day you're actually losing the money again. It's actually not what you always want, and irrespective, you have to know days that you don't need to trade, days you don't need to trade. That's part of being a profitable trader. So that part for on Wednesday, irrespective, SMC worked. For me, SMC worked. On gold, SMC worked. So that is my psychological level. This is my reaction level. I work with this reaction level very well. Sometimes I take trade just with this my reaction level. And I maybe probably with some Fibonacci confluences, you know, and boom. So this particular trade, can you see 15 minutes order block? I cut this trade on the 15 minutes time frame. So let's go to the 15 minutes time frame. Let's go to 15-minute time frame. So what happened on the 15 minutes time frame? Very sweet. Very sweet. Very, very sweet. Can you see? We had a clear order block. Now, they always have this rule about order block. Always choose the order block that is closest to liquidity. Can you see here? This is closest to liquidity. After this order block, there is no other confluence that is okay that like this particular order block. This one here does not have an imbalance irrespective, you know. If the imbalance is not enough, so you actually look at this particular order block. And why I choose this order block also was because it's actually on my psychological level. I know there is no how the market will want to break this particular order block. I am going to catch the retest. But irrespective, I saw an order block. Now my rule for marking order block on gold, I only mark the body candle. I don't mark the wicks. The wicks it's actually not relevant. So I only mark the body candle. I saw an imbalance. So my rule number 1 is order block. This is my imbalance. This is my fair value gap or imbalance, anything you want to call it. This is my liquidity. And after getting that liquidity, what happened? We saw some reaction, and it came into my P.O.I immediately, and it gave us a 8:1 RR. But I actually caught a stop loss while waiting for this particular order block. You see how the market actually induced people into it. You would always see this manipulation, whether you like it or not. You will always see these manipulations. Now on the 5 minutes time frame, it actually gave me clear information that this particular market was going to give me a sell, but irrespective, it was manipulation. And I was part of the people that was liquidated here. So irrespective, the liquidity went in, I was part of liquidity. So you can't, that is inevitable, so it's a normal thing. So on the 5 minutes time frame, I'm going to go back to explain this particular trade that I actually got a stop loss here, and but let me finish this particular one. So my rule number one is, when I saw this particular market structure shift, it was on a high. We have actually been in an uptrend from beginning. So irrespective, when I saw this movement of this market shift, I knew that irrespective, the market is still going to come back to this particular order block to tap in and give us some little reactions also. So my rule number one for this trade: order block number one, imbalance number two, liquidity rule number three, and my entry rule number four. So irrespective, that is how we actually caught this particular trade. We didn't put this because this is supposed to be a break of structure, but on the 5 minutes time frame, it is a market structure shift. On the 5 minutes time frame, it is a market structure shift. But on the 15 minutes time frame, it's a break of structure, because it's part of the confluence that I actually used to actually catch this trade. So let's go back to our 5 minutes time frame. Let's go back to our 5 minutes time frame. So on the 5 minutes time frame, now see how I was induced into this market. See how I was induced. Can you see a clear break of structure? This is my number one clear break of structure. After this break of structure, I wanted to use OCL to enter this market, or probably use this order block, but there is no clear order block here that I was going to use, because I was looking at this already. This was my liquidity already. But irrespective, I saw this engineered liquidity. I felt the OCL was going to hold it on, bring it to this zone. Can you see? Sorry, I like explaining my trades. Break of structure. Can you see? Engineered liquidity. Take it out and then give me give me my reaction, you know. But it didn't happen that way at last. It didn't happen that way. Irrespective, it gave us a stop. It actually took us out, because you must be part of the liquidity. That's the rule of the market. That's the rule of the market. But irrespective, can you see this reaction here? When it came to our liquidity, what did it do? It gave us little reaction to take them out, tap into the institutional block, and actually started rallying down. So irrespective, it actually gave us an 8:1 RR. Now this third trade. Now for Wednesday, this is my second trade. The third trade for Wednesday, can you see? Wednesday actually gave us a trading range around this zone, from this zone to this zone. This is why I draw this my psychological level. I always say this. That is my reason for my psychological level. So irrespective, boom. So secondly, I use fib level to catch this second trade, and I'm actually going to be drawing that fib level so that we understand better. I actually cut my fib level from this particular top here to the bottom. Can you see? To the bottom of this particular place here. To this bottom here. And I anticipated that my market is going to come into my 0.5 level. Can you see? The moment the market tapped into the 0.5 level. Now, because of my spread, that's why I kept my table here. It was supposed to be around here, but because of my spread, I brought it down so that I didn't keep my entry here. I kept it because of the spread. Tapped into in between 0.618 and 0.5, and irrespective, when it gets to the 0.5 level, it actually gave us a reaction that we actually use this our double engulfing to exit the market. Now, that is how I actually caught this trade with the fib level. Second, the third trade, this is one of my personal created strategy that I use on gold. Double engulfing candle. This is a double engulfing candle. Immediate buy and an immediate sell. It still came again. Immediate buy and an immediate sell with huge bodies. That is what I always look at on the 5 minutes time frame on gold. Immediate I saw this double engulfing, I use it as my take profit, and I also use it as my entry. Can you see? Double engulfing, marked, and irrespective what happened, this is a clear information that when you have enough screen time on your charts, there is no how you won't have eyes for all these particular setups. There is no how. You just have to put in the work. You just have to put in the work for you to see all of this. It actually comes up every day. All these setups comes up every fucking day, but irrespective, you just have to have those eyes, and maybe probably you've trained your eyes to that point that you see all these setups. So irrespective what happened, my sell limit was here already. I didn't use sell limit. I used market execution immediately, because immediately I went out of this particular trade. Immediately I exited this trade, I actually entered another trade, because this was 11:05. Go around London, that's New York kill zone. Get into New York kill zone. So irrespective, I entered this trade and I caught a 7:1 RR. A 7:1 RR. And immediately we saw a nice waterfall. So after all of this, where did I actually catch this particular trade again? Fibonacci level. You see, in this market, you have to always use confluences. You don't want to be on a zone whereby they tell you not to really overtrade. Yes, you don't have to overtrade, but when you've backtested enough strategy and you've trained your eyes to see all these setups, you see, you would actually have proper eyes for all these setups, because they always form every day. This setup forms every day. So irrespective what happened, this is my level in between my 0.5 level and my 0.618 level. And what happened immediately? Irrespective, boom. Let me use my illustrator here. The market came here, retraced back, came to our psychological level. This is my reaction level. I always say this. Can you see? Came into this market again, retested this psychological level and came to our 0.5 level and our 0.618 level. Can you see? The market first respected our 0.5 level, gave us our take profit. We took our profit from this particular zone, but the market respected this particular zone again. Can you see? Before it actually went to the next one. See, you have to understand this psychological level so that you can be profitable on gold. Gold now does not really respect any unnecessary strategies that you actually tweak in. Gold respects zones much more, way better now. So irrespective, I would advise people to go for gold zone trading. Go and know how to trade zones. On gold. So irrespective, you can have several confluence while you're trading, and while you are even entering the trade, while you are even taking profits from that particular zone. You know, that is one confluence around gold. So irrespective on this trade, we caught a 4:1 RR. Boom, straight to trade profits. So for the second trade now. Okay, so on Wednesday, this is the first trade, second trade, third trade, fourth trade, fifth trade, and still on Wednesday, this is the fifth trade. This is 320. This is still New York session. Can you see this fib level was a New York open 130? We caught this at 130. So irrespective, this is around 320, 325. Let's say 3 o'clock. New York break. So irrespective, don't forget my double engulfing candle was what I used to catch this trade again. Double engulfing candle. Now my resistance is now a support. Can you see? This double engulfing candle holds a lot of confluence that a lot of people don't understand on products now. Double engulfing candle supports resistance. Can you see? It's actually a resistance before. Resistance now becomes support. When I saw that it tapped into this market, I didn't enter immediately. I waited to make sure that it is breaking this my psychological level, because it has been finding it difficult to break this psychological level. But when it actually came into this market with big momentum, market execution. What are you talking about? Market execution. Immediately I actually entered this trade, and my stop loss was around here. So irrespective, I won't say my stop loss is around, supposed to be around there, because I knew that is where my resistance is and my support is now. It is very hard for the market to come back to this zone. So I'm supposed to bring my stop loss up. Let's say I actually got an 8:1 RR on this particular trade. I caught an 8:1 RR on this trade, and that is how I actually entered and smashed this particular trade. Can you see? Confluence number 1, double engulfing candle. It's actually a resistance before, but now a support, waiting for it to break my psychological level before I enter with a market execution. And that was what happened. And that is how we actually caught this particular trade for Wednesday. So for that day, that was our last trade for Wednesday, and boom, we were able to catch about 5 trades on Wednesday alone. 1, 2, 3, 4 trades, 1 SL, and that is it for Wednesday. And for Thursday was also choppy. SMC tried to work, but it didn't work. It only gave us reaction. Normally for SMC, I've knew for SMC that there is no time for me to always wait for a big move on SMC. When it gives you reaction, you see little profit, make sure you take it immediately. Take that profit earlier before it reverses. You might be looking for a huge run up. That was there. Now zone trading on gold is the main thing. Support and resistance. You see people using MSNR alchemy strategy and now enjoying gold very, very well, because when you know where the support is and when you know where the resistance is, when you know where the psychological levels are, trading becomes very, very fucking easy. So irrespective, on this particular day, this is 8 a.m. London Open. Can you see? London Open created an order block for us. I only trade London session and New York session. Days I trade Asian session are days I actually look at my fundamentals. Maybe I knew that there was a news that was going to come out maybe around Asian session. That is when I trade Asian session. So you need to always look at not only your technical analysis, always look at your fundamental analysis also. So irrespective what happened, this is now our support. Marked my support, and irrespective, I marked the week for a reason. Now, without marking this week, don't forget this is a clear break of structure for us. And now my break of structure line is a confluence for me on its own. You see, you have to make trading easy. You have to unlearn some kind of complexity you have before you can make it out of trading. You have to unlearn those complexity. So irrespective, my POS line was one of my confluence that I actually used to enter this particular trade, because London session has already broke out of this psychological level. You see, this psychological level gives a lot of confluence. London session has broken out of this psychological level, and that on that particular psychological level is where our order block is. So I don't expect the market to come and retest this psychological level. I don't expect it to come and respect it immediately. So what I was looking for was a little bit retracement into probably a fair value gap, or maybe a 50% out of fib level. I didn't use fib level to enter this trade, but let's test fib level. What would happen if we use fib level? Can you see? Tapped into our 0.5 level. I didn't use fib level, but when I drew fib level, can you see what happened? Tapped into our 0.5 level, and it started giving us a good reaction immediately. So like I was saying, it started giving us a good reaction immediately. So my confluence is price and time here. So break of structure, when I saw this break of structure, I knew it wasn't going to come for this order block because it's lying on my psychological level. This is a reaction level, and the market does not have that time to come to this reaction level and start going, because as you can see on this trade, when I entered was around 8:45 a.m. already. 8:45 a.m. already. So irrespective, the market started rallying up to the next psychological level. What is it? Hello, bro. How far now? Amy. I did, bro. I did, bro. How far now? Yes, bro. And just give me like 15 minutes and then let me finish this. No. So like I was saying, while the market was playing around this zone, we were able to catch a 4:1 RR. So while rallying up with this particular trade, I was just looking at the market and looking at our obstructions that we have on the 5 minutes time frame. If you look at, we really don't have enough obstructions, but irrespective, I had some double engulfing candle here on the 1 hour time frame. I moved back to the 1 hour time frame to see what is really happening, and boom, I knew the market was going to get stopped from this particular zone. So irrespective, I didn't enter any trade because I didn't see any clear setup for me. Probably others might have seen good setup, but for me, I didn't clearly see any clear setup. This was supposed to be a setup, liquidity, but no imbalance. You see, that is gambling. No imbalance. This is liquidity, no imbalance. And even the candle was just an hammer candle. Yes, it's also a confluence for you to know that we are going to go through a reversal, but that is not enough confluence for me. So irrespective, I waited to see some kind of formation in the market. So irrespective, I waited and I saw this particular order block while this market was creating. Can you see? This order block now, you call it an SMC, you call it SMC. Yes, SMC, but it took me out. And I am not ready to actually enter again because SMC is not worth risking for me anymore. For me, it's not worth risking anymore. So irrespective, my sell limit was under this particular liquidity here. So my belief was that it's coming to sweep this liquidity, and irrespective, we see a rally up. But what happened? After sweeping the liquidity, what happened? The second candle came and took me out. Second candle took me out, and after taking me out, what happened? We saw little reaction and reversal. So when I started seeing this reversal, I knew we were actually getting a resistance again. We have a resistance. So what happened? What do I always look at? Double engulfing candle. Can you see? Immediate buy and an immediate sell. What happened here? Big body candles. See all this one too. Immediate buy and immediate sell. So I choose the one under. And irrespective, boom, the market actually respected our resistance, and I entered the trade because I saw liquidity, fair value gap, and several confluences. So let's count the confluences that I actually have on this particular trade. This is our resistance, double engulfing candle, number one. Secondly, we have an imbalance, number two. If you look at, you see the time we entered this trade, perfect timing. Two. Number three, irrespective, I will call this liquidity around that same fair value gap. But if you go to the 1 minute time frame, where this fair value gap and this double engulfing is actually an order block. But irrespective, it's actually an order block, but irrespective, I didn't go to the 5 minute time frame. When I saw this fair value gap, I was just waiting for time. And irrespective, London break 3:30 p.m. 3:30. Boom, the market came in, tap us in, give us little reaction. And why did I take profit here? Psychological level. Now, if you look at, you remember that we have an order block lying on our psychological level. Now, why are we not using this same order block again? Because this market, can you see here, came in, tapped into this particular imbalance here, gave us reaction, and also came into this order block, gave us reaction and failed it. So now what I always target is failed order block on gold. Failed order block. The moment I see a failed order block, I wait for a retest and I enter. So that is how I actually caught a stop loss on this particular SMC. And for this particular support and resistance, I was able to catch a 6:1 RR. So now for my psychological level, I always talk about break and retest. Can you see? After the market actually break this my psychological level, firstly, it actually came for a retest. It came for a retest. You can actually use this OCL as your number one conference and also use this as a liquidity, but that is not enough reason. All I was looking for is one rule: break, retest, and fall. Very simple. Make your trading plan very simple and you start seeing enough growth out of it. Make it very simple. And immediately I saw a retest of this my psychological level, and at the same time my order block that was broken, I entered the market immediately and it gave us a 7:1 RR. That is how I actually caught this particular trades on Thursday. Yeah, and on Friday there wasn't enough confluence for Friday. We just started seeing a waterfall for Friday. Probably, actually, I did not take any trade for Friday, but taking this particular trade, I was stopped out for a reason. I was stopped out here because I wasn't risking much. I didn't want to risk much because the confluence was not enough for me. I didn't mean I actually caught the trade from this particular zone. Yes, I can call it a nice confluence, but let's look at our psychological level, why we actually entered that trade. Can you see? Now, my number one rule: break of structure. Can you see? We had a break of structure here. Now, my break of structure line is actually lying on my psychological level. I don't know why people don't really mark reaction levels on gold. I don't know why people don't mark reaction levels on gold. Reaction levels gives you bigger confluence on gold. People might not see this video, might not understand what I'm saying, but as time goes on, you get to understand what I am saying about psychological level. I don't have to force you to actually know or watch my strategy, but all I believe is as time goes on, people will get to understand what psychological level or reaction level is. So irrespective, my break of structure was lying on my psychological level, and when I saw the break, I waited for the retest. When I saw the retest, I entered the market, and irrespective, the market gave me a 7:1 RR. Can you see? 7:1 RR, and that is how I actually closed this week with those sweet trades. So thanks for watching my trade recap, guys, and I'll see you on the next one. Peace out.